All right. Welcome to the Cryptoverse DAO. It is a Monday, and I am Dharma. I was Dharma on Friday, I was Dharma through the weekend, and I'm still Dharma on Monday. It is what it is. Let's get into the news. Let's see what's been going on in the world of crypto, in the world of DeFi, and in the world of the world, man. We're looking at Barclays, expected to invest millions of dollars in Copper's upcoming funding round. Copper is a crypto custodian. They're valued at about $2 billion, and Barclays is a very reputable, respected bank in the UK. It's very interesting. This is a report by Sky News very recently. Copper, the firm, is actually advised by Lord Hammond, who's the former Chancellor of the UK, and they're raising funds from existing and new investors, including, obviously Barclays. They're taking a stake in Copper, one of the most prominent names in the fast evolving cryptocurrency sector, even as the industry continues to be rocked by a swath of bankruptcies, right? Bullish indicator, I'd say. Millions of dollars, that's what the speculation is as a part of the raise. This is what Barclays is looking at, putting towards the raise. Citing sources. Fantastic. That's what Sky News said. The funding round values Copper, like I said before, at about 2 billion USD, and it's expected to close in the coming days. Copper has chosen to become regulated in Switzerland after it was unable to register with the UK's FCA. Former Chancellor Philip Hammond, he serves as an advisor for Copper. Like I said before, very respected and established bank. Barclays is actually one of the biggest banks in the UK, and their total assets are sat at around 1.4 trillion USD as of last year. Marcus Sotiriou, a analyst at digital asset broker Global Block, said that the bank's move does not come as a surprise given Barclays' prior investment in institutional crypto services provider Elwood Technologies. This was in May. This is what Sotiriou said. He said that this shows that although crypto faces a lot of significant hurdles due to the macro environment and a lack of buyers, financial institutions are showing an increase in interest, and the long-term value continues to expand. Neither Barclays nor Copper immediately responded to requests for comment, so it's closing in a few days. We'll have to come back, follow this story, and see how it goes. Now, speaking of macro conditions, we're looking at crypto markets dipping ahead of upcoming Fed meeting. So the crypto market has flipped red as investors prepare for a 2-day Fed meeting, which is expected to see a 75 basis point rate hike. Now, the price of Bitcoin, the price of Ethereum, the price of all other major cryptocurrencies, not all, I shouldn't say that, but like most other major cryptocurrencies, has slumped today as the Federal Reserve is expected to increase its benchmark interest rate by 0.75% or 75 basis points, which will be the largest hike in nearly 3 decades. At the time of writing, BTC slid to a weekly low of about 2,109.35. That's down 2.8% over the past 24 hours, and Ethereum, which is the second largest cryptocurrency in the world, shed nearly 5%. And the current value at the time of writing was 1,528. Among the 10 largest crypto assets, Cardano is the heaviest hit with a drop of almost 7% over the day, followed by Solana and Dogecoin, and also XRP, which all had about 4 and something percent reductions over the day. Now, the combined market cap of all cryptocurrencies has dropped from 1.08 trillion last Wednesday to 1 trillion USD by press time, according to data from CoinMarketCap. The latest price action comes ahead of the 2-day-long Federal Reserve meeting, kicking off on Tuesday. Like we said, 75 basis point increase is expected. Fed officials have already upped benchmark short-term borrowing rates by 1.5% this year. And also, there was a 75 basis point increase in June. The move, which the Fed considers its main weapon to curb growing inflation, will see the interest rate, which is the rate that banks charge each other for overnight loans, increase to a target range of 2.25% to 2.50%, meaning that pandemic-era support for the U.S. economy is effectively coming to an end. When the federal funds rate goes up, this impacts the entire economy. adjustable rate mortgages, home equity lines of credit, credit cards, student debt, savings deposit, pretty much everything, any financial service just becomes more expensive. Now, the idea is that less accessible borrowing will dampen consumer demand, thus bringing inflation down. Interestingly, though, U.S. inflation has actually accelerated since the Fed began raising rates in March. Surging prices for gas, surging prices for food, for rent, catapulting the figure to a fresh 4-decade high of 9.1%. Interest rate hikes could also play out on stocks, on crypto, and other risky investments, while bringing risks of a decrease in capital inflows and ultimately a decline in economic growth. The expected increase of interest rates in the US also follows a similar move by the European Central Bank last Thursday, when the benchmark interest rate in the Eurozone was upped by 0.5%. So wherever they use the euro, upped by 0.5%. Next thing we want to talk about, Yuga Labs, the guys behind Bored Ape Yacht Club, or potentially Bored Ape Nazi Club. Yuga Labs was threatened with a possible class action lawsuit. The suit likely will allege that Yuga Labs, Bored Ape Yacht Club, NFTs, and ApeCoin are securities that failed to deliver on promised returns. Last month, Yuga Labs, the $4 billion company behind popular NFT collection Bored Ape Yacht Club, generated headlines by suing a prominent artist for trademark infringement. Just for context, there's a guy called Ryder Rips. He created this thing called RR slash Basie, Ryder Rips Basie. Pretty much, he did. It was plagiarism, to be fair. But the reason that he claimed to have done it is he went on this whole spiel about art and artistic expression, and also it was in response to a theory that he had been researching for a very, very long time, that claimed a knowing use of Nazi imagery and alt-right imagery and stuff like that. Very interesting. Go down that rabbit hole because it's very interesting. Follow him on Twitter as well because he tweets a lot, and it's some of the tweets could use some work, but it's just interesting to stay in that in that conversation. But yeah, so they generated headlines by suing the guy. And now the company may find itself on the other side of the courtroom. Scott plus Scott is currently organizing a class action suit against Yuga, according to an announcement from the firm late this week. It would have been last week. The lawsuit will allege that Yuga falsely promoted Bored Ape NFTs and ApeCoin as securities with guaranteed returns, but which in reality plummeted in value over the last 3 months. The case's plaintiffs have not yet filed an official complaint in a federal court. They're still in the preliminary stage of seeking plaintiffs who suffered losses in association with the purchase of Yuga-backed NFTs and tokens from April to June. The firm did not immediately respond to a request for comment on the story. Key to the suit's success, once filed, will be the court's determination as to whether NFTs are securities. So that'll be a very interesting court case to follow, similar to a share. Securities, which, similar to a share in a company that could appreciate in value. If a court finds the Basie NFTs to be securities, then Yuga Labs would have failed to make the necessary disclosure and registration obligations that come with offering securities. But that may be a long shot. This is Brian Fire. That's a cool name. Brian Fire, a professor at the University of Kentucky, professor of law. He says, I see very, very, very little, as 3 varies, okay, a little likelihood that the SEC is going to want to step in there and characterize the Basie collection as a security. I think they're going to resist that tooth and nail because that would open up a huge can of worms for them and force them to regulate all manner of other things that they don't want to be regulating. Interesting take. This is Ryder Rips, the man himself. Look at that. You could check out the full conversation on Twitter in your own time. Very interesting. The SEC has thus far refrained from decisively labeling any NFT as a security. That may have something to do with the fact that such a move would likely bring the broader art market under the SEC's purview, and that is something the agency has long resisted. I wonder why, but yeah, I don't really get the sense that the SEC knows what it wants to do yet, and in fact, in some ways, I fear that they don't know what's going on. Again, fire. Technically, whether any financial offering constitutes a security is determined by the Howey test. It's a four-prong evaluation established by the Supreme Court in 1946, but in reality, things are not so black and white. When something is a security, it becomes a security when the SEC decides it wants to regulate it. That's when it becomes a security. This is what Professor Fire is saying. The real question is, does the SEC want to regulate this particular market? And in Fire's opinion, the SEC does not want to. What do you think if you hold a different opinion? Because I think it might have been a different, like a previous news episode, or maybe it was a live discussion in the Discord, but we were talking about LBRY, that the company that was literally saying, don't go to the SEC. Do not go to them, because, we will go to them and ask them, like, how do we become compliant? What do we do in order to become compliant? And then they just slap them with a lawsuit, like they literally persecute. So I mean, we'll just have to wait and see, I suppose, how this develops. But this is pretty key, pretty interesting, pretty critical for the future of the SEC versus NFTs, I suppose. Now the potential class action suit against Yuga, what it's going to effectively allege is that customers bought artworks, expected them to increase in value based on reputation, and if courts find that Yuga Labs is on the hook here, it's really not much of a stretch for the SEC to start regulating the sales of everything: paintings, sculptures, tapestries, items far different from stocks, which are the agency's bread and butter. End of the day, if you're buying, the whole point is if you're buying with the expectation of, I mean, it sets it out here, right? Expecting them to increase in value based on reputation. Oh, okay, an artist. Okay, yeah, fair. That's a little bit not as black and white. Yeah, that does make sense. So classifying Yuga's NFT collections as securities may pose an uphill battle, but the lawsuit will also allege that Basie's native token, ApeCoin, is a security, and that argument could have more traction. ApeCoin was launched by Yuga in March. It was a cryptocurrency which granted holders the ability to vote on the governance proposals of the ApeCoin DAO, a decentralized autonomous organization that makes decisions related to the Bored Ape Yacht Club ecosystem. The coin's value tends to fluctuate with the fortunes of Basie and Yuga Labs. Something like ApeCoin, I could finally see the SEC saying, okay, that looks a lot like a share in a business. Despite the federal government largely refraining from labeling NFTs as securities, last month the Department of Justice charged a former executive at OpenSea with insider trading. The charges alleged that the executive made trades informed by insider knowledge about which NFT collections would be featured on OpenSea's homepage. The weirdness about that is, how do you insider trade unless you're doing it with something that's a security, trading on securities markets? But despite labeling the executive's actions as insider trading, the DOJ only charged him with wire fraud and money laundering, which, effectively avoided any formal labeling of the actual NFTs as securities. The suit against Yuga may force the SEC to finally make a commitment as to whether NFTs are securities in its eyes, or even governance tokens like ApeCoin, whether those are securities. Or the agency may once again elect to punt. I don't really get the sense, says Fire, that the SEC knows what it wants to do yet, and in some ways, I fear they have no idea what's going on. Paraphrasing, but what do you guys think? Do you think the SEC are going to take the plunge and label NFTs, treat them as securities, and deal with the can of worms that comes with that? Or do you think that they're going to punt, as the article kind of assumes? Let us know in the comments below. Moving on from Yuga, Michael Saylor goads Elon Musk for Tesla's Bitcoin dump. Elsewhere, Minecraft said it will prohibit NFT use on its servers, in addition to banning NFTs that use the game's assets. Man, I love Minecraft. Why? Prices may be in the green for the week, but crypto Twitter remained focused on the sector's ongoing liquidity crisis. Zipmex froze withdrawals. We talked about that. Legion Strategies, it's a hedge fund affiliated with Scaramucci's Skybridge, halted redemptions. Meanwhile, blockchain.com joined the ranks of Gemini, Coinbase, OpenSea by announcing massive layoffs, and Tesla cashed out 75% of its Bitcoin for 936 million United States dollars. MicroStrategy CEO Michael Saylor, a billionaire Bitcoin bull, maximalist, amazing, quickly pointed out the hard truths of Tesla's sale. If you sell 75% of your Bitcoin, you will only have 25% of your Bitcoin left. Yes, Michael, that's true. In the thick of bankruptcies, one firm is stacking that cash. Kirkland & Ellis, previously hired by Voyager and Celsius to help them restructure. This week, they were hired by Babel Finance. Last Sunday, Babel paused withdrawals, citing liquidity pressures. Very interesting. An affidavit from Kyle Davis, a co-founder of the newly bankrupt 3AC, claims that the former crypto hedge fund owes $65 million to his wife and $5 million to co-founder Su Zhu. Davis and Zhu, effectively radio silent, right, for 5 weeks, told Bloomberg what they were doing with investors' funds before it all collapsed. Let's take a look at that. Cite 3 key crypto trades that blew up the firm. We talked about this in the previous news episode as well. We believed everything to the fullest. They blamed it on Terra as well, on Terra, the Terra Luna crash. Suju is seeking $5 million from 3AC bankruptcy. 3AC co-founder Kyle Davis, bloody hell, Kyle Davis, his wife, is seeking 65. Hilarious. I mean, yeah, somewhat. The DeFi news outlet The Defiant compiled some of the most affecting letters written to the judge by those affected by the Celsius bankruptcy. They really hammer home the human cost of the liquidity crisis, and at the end of the day, this is really what you need to consider. I mean, it's innocent people getting hurt, getting burned, and this is why the Cryptoverse DAO exists, to prevent this kind of thing from happening. It's very important that you do your own research. Any investment, do your own research into it. If something feels off, do not invest. If you do not have enough to spare, do not fucking invest. Do not always diversify your portfolio. Always practice risk management. That is the most important thing in the world. Now, again, you can practice all the risk management that you want to in the world, and then you have dickheads like these guys who, you know, make false claims, pretend to be something that they're not. And this is why regulation is important to a degree. And this is why I'm kind of happy that we're seeing, I mean, at the end of the day, it's, you know, it's government. We got to deal with what we got. But it's the only thing that we got, right? This is the, you know, it's regulation, regulation that does not infringe on financial freedoms. That's what we need to kind of vote towards, exercise our, you know, whatever power we actually have. Try to use it as much as you can. But what you can do is not part with your money unless you are 100% sure that the risk to reward ratio is something that you are happy with. If you are mortgaging your house to put money into something, ask yourself if the risk to reward ratio is something that you are happy to go through with. Read this conversation on Twitter. Hear the stories of people who genuinely lost everything. I read about like a 49-year-old who would have had to start over from scratch. Let's take a look at this. Look at that. I have my entire life savings and retirement invested in Celsius. I cannot begin to tell you the level of devastation I can imagine, and the horror I felt when they froze withdrawals. Devastating to me and my family, mentally, physically, financially. Cannot sleep. Overwhelmed. 2 small children, 3 and 2 years old, sole breadwinner for the family, priding themselves on making smart financial and parental decisions, right? I mean, it makes sense. You can think. Like I said, it's all well and good to have people tell you to practice risk management, but then again, this is why regulation is important, right? It is the wild, wild west, and you can get in early, but get in safely, get in smartly. Do not put your life savings, do not put your retirement money into anything, right? Unless you are 100% certain. And even then, even if you're 100% certain, I would not advise you to do that, because that's just not good risk management. I was going to be using my funds to finish building my home and complete the construction of my property that has already been underway for over a year. Wow, horrible. That sucks. Placed my entire economic injury disaster loan. This was the one, yeah, the 49-year-old who had to restart from scratch. He had a kind of like a bailout, like a loan, right? An economic injury disaster loan. And he wanted to earn APY to pay back the interest. And then boom, if the funds are not returned, he's gonna go bankrupt. 15 employees are gonna lose their jobs. 14 years of this guy's life's work is going to be lost, and at 50 he's going to have to start over with nothing. That would leave me depressed, suicidal, and without words as well. Female client from Australia with crypto deposits on Celsius, similar to many other retail investors, severely impacted financially, mentally, expecting third child in 2.5 months, need the money to pay for all the expenses, and to seriously ill. All the savings have been tied up in the Celsius network. I was planning to withdraw from Celsius to fund my birth and my aunt's operation in late June, but because of the withdrawal halt, she says she does not have access to any of her funds, and life has just become miserable. Worried that stress because of Celsius will affect the health of my unborn child. Well, and 2 other children still in primary ages. Family also need to fund. They need funds that are locked in Celsius for their education. One of many common retail investors that invested with Celsius after the constant advertisements. Earn great and safe API returns like the rich. You can access your money at any time. Your crypto is always safe with us. To be fair, yeah, it was literally written out in like the terms and conditions that Celsius will under no conditions lock withdrawals or whatever. Like they said they wouldn't do this. Like even the people who did their research kind of got burned. Yeah, that's a shit situation. As a disabled combat veteran, man, served in Afghanistan, has not been easy to maintain employment, save money. Been saving for years to amass the sum that he had in Celsius, right? But now a minnow in a sea of whales. $36,000 loan to Celsius took nearly a decade to save for. Wow. Yeah, there you go, man. Yeah, those Celsius guys should be feeling like absolute pieces of garbage right now, because that's not nice. That's not nice. On a more optimistic note, though, the blockchain-based file sharing network, LBRY, yeah, these are the guys. They beat them in court. Amazing. Literally, they beat the SEC in court. Beautiful. Guess not every non-Bitcoin token on the blockchain is a security after all, huh, Gary Gensler? Interesting. Okay, cool. I'm not gonna go down that rabbit hole today. About to go into court to defend library and crypto. They take your phone. They take your phone. So no more updates after this. And we're free. Judge was skeptical of... Literally, I saw the tweet. I saw a tweet about this saying that the SEC was going back and forth too much. I got a notification. I was going to McDonald's today, and literally I saw like a notification. I was walking with a friend of mine, and I was like, hey, bro, look at this. Apparently the SEC is going back and forth too much. SEC was forced to admit that substantial usage of library was non-speculative, ruling in 4 to 8 weeks on summary judgment. Trial seems unlikely. More later and live on Crypto Law US at 7 p.m. Thanks to all who came, many not pictured. Sweet, amazing, beautiful. And also Minecraft has banned NFTs, man. This is a big sign of adoption, just like banning books makes them more popular. So too will the Web2 backlash against NFTs pave the way for viral growth. Good reminder of why you shouldn't build on corporate-owned Web2 networks. They changed the rules on developers on a whim. So the Microsoft-published hit sandbox game Minecraft announced it will block the use of NFTs and blockchain technology on its servers, prohibit the creation of NFTs based on its assets. Axie Infinity co-founder Jiho, this guy, he was bullish. The Minecraft-based project NFT Worlds tweeted a lengthy project protest. I did see this. Some people were commenting, "Oh no, now it's time to build our own game." Oh, what a nightmare! It is both a philosophical conflict over what the internet represents and a technological struggle over who will have ownership of digital assets. Microsoft has made it clear they will always act in the interest of their shareholders and balance sheet, to the detriment of innovation, player experience, and creators. I mean, welcome to capitalism. Like, what do you expect? We believe an open, free, evolved version of what Minecraft brought to the world. will be a better future for creators, developers, and ultimately gamers. I suppose so. Wait, what the fuck? No, what the fuck? Get out of here. Don't know what that was. Sorry about that. Others saw it coming a long time ago, including Decrypt's own Kate Irwin, who called it 5 months ago. The Minecraft NFT folks aren't happy with Microsoft Mojang's decision to ban NFTs, so they're going to build their own Minecraft. Good luck with that, is what they say. Signal no regard for creators, builders, players, regardless of public-facing ideals around creators they say they uphold. Not the first time they've enforced a crippling policy or agenda. I don't think it's like that. Well, coming from a decade's worth of enjoyable experiences with Minecraft, this stings and feels like a violation of the true creative spirit that Minecraft was supposed to embody and enable. Minecraft is no longer a welcoming place for us or for creators involved with our platform. For many, this would be the end. We're creating a new game and a platform based on many of the core mechanics of Minecraft, mining and crafting, but with the modernization and active development that Minecraft has been missing for years. A little bit of shade there. Very interesting. Very, very interesting. Playstyle, look, and feel will be familiar, but game mechanics and all of that stuff are going to be completely different. Will usher in a more accessible, ownable, and enjoyable playing experience. And untethered from the policy enforcement Microsoft and Mojang have over Minecraft. Truly become our own open game and platform. They should have just been doing this from the beginning. I don't know why they're being so salty about, oh, a company wants to act in the interest of its shareholders. Nightmare. What? Crazy. Like, yeah, of course. I think they should. I mean, it makes sense to tie yourself to something like Minecraft, but you know, make your own thing, man. Make your own thing. That's my take on this. Kate Irwin says, I called it back in February. There was a very good chance that Minecraft would shut them down. And their fanboy army got so mad. Yeah, they did actually. Look at that. I raised the concerns and possibilities back in February that they could easily be shut down by Minecraft, but no one listened. Fanboys got angry at me for fudding their bags. Well, the possibility was always there. Interesting. Very, very interesting. And now it's happened. On Monday, there was some speculation as to who on this whole thing. I would say, just because, and this is something you can relate to anything in your life, just because you want something to be so, doesn't mean that that is the correct or right or best thing for the world, you know? Just a little nugget for thought. Now, on Monday, there was some speculation as to who owned a wallet that purchased a certain domain on the Ethereum name service. That's $1 million USDC, $1 million worth of USDC, I suppose, bid on Amazon.eth. Very interesting. From a fresh wallet. Let's take a look at that. Same wallet owns the below. I doubt this is the real Amazon. XXX.eth? Is that what they own? Interesting, okay. I have EC2.eth and EBS.eth. Hopefully they make it right down. If this is a real bid, then it's got to be Amazon themselves doing it. No individual would take such a massive risk of a potential legal dispute. I mean, fair point, but have you met individuals? Like, people do stupid shit. It would only be a legal dispute if someone infringed on the IP. It's a generic term on, like, Google. Yeah, fair. I mean, Google is a number. Oh, no, but it's spelled differently. Yeah. No, that's a fair point. Would need to have bought with the bad faith intent to provide. Oh, this is someone I follow. Bad faith intent to provide to profit, from the goodwill of the actual trademark owner, and or with the bad faith intent to hold the name hostage. Right, cyber squatting. Could be. You still have time to buy them on cheap price. This guy, man. Look at this. Fission, Gopher Stairs, Bisque Farm, Rajnaganda. Bloody hell. Very interesting. New bid of, yeah, wow. Owner also owns Fortnite.eth. Wow. Cyber squatter of the goddamn century. Look at that. Amazing. Popular NFT marketplace OpenSea. They got into a sassy war of words with the Solana-based rival. You could stop by the marketplace that doesn't take custody of your NFTs, but whatever. Safety. You should try it sometime. Maybe you won't get sued. Oofty doofty. Very fun. Marketplaces beefing on the internet. What a world we live in, huh? Look at that. You should try it sometimes. Maybe you won't get sued. Or you can stop by the marketplace that doesn't take custody of your NFTs, but whatever. list where 90 plus percentage, 90 plus percent of Solana's volume is Zunies. The pre-sale tier for our first Solana Launchpad partner, Zunies, is now live. If you weren't able to get on the pre-sale allow lists, check back in for the public sale. Fun times. That's what's happening in the world of PFP NFTs. Twitter user at 8892OS, who claims to be a fine art dealer and a purveyor of emergency liquidity assistance, that's shady as hell, man, allegedly ripped someone off for a lot of Ethereum, and that person then sent more. This dude literally tweeted, I ripped this guy off for 100 ETH and he just sent me another 1.9? What? Crazy. Hello, this is an ENS domain name that I sold to you for 1.9 wrapped ETH, but I forgot to cancel my own fake joke bid of 100 wrapped ETH from my other wallet, which you then sold to and received 97.5 wrapped ETH after fees. I have tried to refund you the original 1.9 in the hopes to reverse all transactions, but I understand if you want to keep your profits. I am creating this from the wallet that you bought from and sending it from the wallet you sold to, says Franklin. Bloody hell. When is someone gonna fuck up and give me 100? A friend of mine told me about this. The same thing happened to him. He accidentally said, I think it was literally 100 ETH to someone, but they immediately returned it, so that was like bullish indicator in it. But yeah, that's the word on fine art dealers and purveyors of emergency liquidity assistance. Probably don't send those people money, bruh. And Vitalik, looking extra alien-like today. He was thanked for his humanitarian efforts to help Ukraine repel Putin's ongoing invasion. Aid for Ukraine, a Twitter account, says this is Vitalik Buterin, our hero. His donation of 2.5 million USD in ETH to Aid for Ukraine is also worth 31,000 medical kits, 364,000 medical supplies, and 500 and what was the number? 85? Yeah, 585 radio kits and stations for the Ukrainian military. Today, Bo, the COO of Everstake, got to thank him in person. Beautiful. Nice to see Vitalik doing wholesome things. And finally, GameStop's new NFT platform drew criticism for listing an NFT clearly inspired by the Associated Press's photographer Richard Drew's world-famous image of a 9/11 victim, the falling man picture. Yeah. GameStop's new NFT features an... Oh my goodness. The new platform features an NFT mimicking a victim of 9/11. Bruh, what is GameStop doing, dude? Launched on July 12th, off to a less than promising start. Yeah, who signed off on this? This is terrible for PR. This is like terrible. The parallels are literally undeniable parallels. Undeniable parallels. Like with the... Yeah, man. I mean, I suppose it represents something artistically, but you need to bridge that gap before you can, assume that people are not going to misinterpret your meaning. GameStop does not allow just anyone to create and list NFT. Creators have to apply and be approved. Jules, one of their artists, created an NFT clearly modeled after the falling man. It's also titled Falling Man. Okay, never, bro. And pictures a model in the same position, but wearing an astronaut suit. Not only is GameStop selling an NFT of the victim of a tragedy, it's a featured image when Googling GameStop. Not only is GameStop, yeah, Googling GameStop, featured image. Yeah, there it is. Third one. For those not familiar with the photo, this is the photo. GameStop's NFT platform's curated. The Web3 is just going great. This guy, thank you for the sauce. Meaning artists have to apply before they can list their NFTs. And the cheapest edition of this NFT is currently selling for the equivalent of $990, of which GameStop would take a 2.25% cut. This man thinks, or woman, whoever this is, or just person, I guess, thinks that GameStop has delisted the NFT. The link just goes to a blank page now, but there's no takedown message or anything like that. So that's another interesting thing that GameStop has done. Yeah, appears to be delisted. And yeah, that brings us to Zipmex. They halted withdrawals as well, and now they say discussions with potential investors have progressed significantly. Only a few days ago, they halted withdrawals, and now they may have found a potential buyer. Is it FTX? Probably. Just days after pausing customer withdrawals, Singapore-based exchange Zipmex says it's received a MOU from a potential investor, which could be looking to buy out the firm. Our conversations with various interested parties have progressed significantly, tweets the company, adding that one of the parties has offered terms in an MOU, which is a non-binding agreement that's often a starting point for negotiations. Zipmex did not describe the exact nature of the deal. He did not name, they did not name the prospective buyer, only that they sought to commence due diligence, which is quite common in mergers and acquisitions, and enables potential buyers to take a deeper dive on a target company, specifically into its finances and financial statements, to make sure it's a diligent investment, I suppose. Zipmex joined Celsius, Babel, Coinflex in pausing withdrawals for customers in response to like a slump in digital asset prices. Zipmex said in a statement the day after it suspended withdrawals that it has $48 million in exposure to Babel, $5 million in exposure to Celsius, and as the declining price of cryptocurrencies has thrust some companies into financial turmoil, others have stepped in to strike opportunistic deals, including FTX. They recently signed a deal with BlockFi, which includes an option to buy the whole company for $240 million. A deal for Zipmex could be on the horizon, and according to reports, the company has discussions with Coinbase under their belt regarding a potential acquisition in March. But Coinbase instead made a strategic investment, and that amount was not disclosed. Zipmex last week cited circumstances beyond its control on Twitter. Volatile market conditions, that's what they blamed for the halting of withdrawals to maintain the integrity of their platform. ZMT declined by nearly 40%, and the exchange has seen nearly 4 million in trading volume over the past 24 hours, with almost 60% of all trades coming from ZMT. Since announcing the pause, Zipmex has re-enabled customer withdrawals for its trade wallet, where users can store crypto and fiat for trading. But the Z wallet, where users can deposit funds to earn bonuses and rewards, remains offline. Zipmex operates in 4 countries, Singapore, Australia, Indonesia, and Thailand, and offers both spot trading for cryptocurrencies and interest on deposits. And more on, it connects quite well to that previous story about FTX buying or attempting to buy Voyager. They basically made a proposal, and Voyager was just like, "What? That's a lowball bid. What are you trying to do? You're trying to like tell people that we're not worth more than this? This is some nonsense." So bankrupt crypto brokerage Voyager Digital called a rescue deal proposal by FTX a lowball bid. That was just dressed up as a white knight rescue. Sam Bankman-Fried's FTX may have been hailed as the savior of crypto winter, but in the latest twist in its acquisition streak, the company has been accused of lowballing one of its rescue offers. Voyager has called a rescue deal a lowball bid dressed up as a white knight rescue in documents filed to a bankruptcy court in the Southern District of New York on Sunday night. Voyager says that the joint proposal made by FTX and Alameda, the other Bankman-Fried-owned firm, was designed to generate publicity for itself rather than value for Voyager's customers. Yeah, fair enough. Voyager further claimed that the way the proposal was made via a public press release could jeopardize a separate bidding process for the company's assets, which is happening privately. The Alameda FTX proposal is nothing more than a liquidation of cryptocurrency on a basis that advantages Alameda FTX. Voyager filed for bankruptcy protection on the 5th of July this year, and at the same time put forward a plan for how to reorganize the company and return cash to investors. But it has also been exploring alternative proposals through discussions with more than 80 third-party investors, and has asked for indications of interest from potential buyers by this Friday. In the new filing, Voyager outlined several issues with FTX and Alameda and FTX's proposal, including the allegation that the bidder openly disparaged Voyager, and included statements in its press release that are, at best, highly misleading. One sticking point in the assertion is the assertion, that Voyager customers are entitled to a fixed amount based on the value of their wallets on July 5th, when the exchange filed for Chapter 11 bankruptcy protection. But Voyager disagreed with this premise, said that its own plan for reorganizing the company does not cap customer claims in this way. The rescue deal would effectively eliminate the platform's own VGX token, which Voyager estimates would immediately destroy $100 million. Other issues raised include the tax burden on customers wishing to withdraw cash, as well as confusion over the fact that FTX has said the Voyager brand has no independent value, but would want a discount on its acquisition price if the brand was sold to someone else. Voyager is just one of a handful of distressed crypto firms that FTX has eyed amid the fallout of the market downturn. Last month, it acquired Canadian exchange BitVo and is currently in the process of buying BlockFi. Bankman-Fried has spoken of FTX's responsibility to stabilize the crypto ecosystem by stepping in where possible, a concept that was also noted in FTX's proposal to acquire Voyager Digital's assets and loans. In a document outlining the benefits of the proposed transaction, Alameda and FTX said it was in their best interest to show that crypto business can be resolved like other financial institutions, thereby buoying confidence in crypto as an asset class. This is the man himself, Sam Bankman-Fried, FTX, white knight, savior. In a Twitter response to Voyager's latest court filing, Bankman-Fried characterized objections to FTX's offer as the "please give us some excuse to charge more fees on the estate parade." Bankman-Fried also added that the bid was motivated by a desire to get customers their money back before it could be drained by the bankruptcy process. Lots of parties were trying to bid 10 cents on the dollar for the assets, he wrote. If a customer had $100 on the platform, a third party would pay $10 for it, get whatever funds remained, maybe $75, and the customer gets back $10. Voyager has asked for potential buyers to signal their interests by this Friday so that it can determine whether there is a better alternative to its own plan. In its proposal, FTX said that it has no issue with this process continuing alongside discussions of its own bid for Voyager's assets, and that Voyager could then decide whether to sign an agreement for its deal based on what other offers are received. If Voyager does change its tune and decides to go with FTX in the end, then the deal could be done as soon as this weekend, which is according to FTX's initial timetable, in accordance with its initial timetable. And that's the spread of the news, guys. Thank you so much for being a part of it. What's your interpretation of things? What do you think this is going to mean for the world of crypto? Let us know in the comments below. Join the Discord if you want to be a part of these conversations live. I've been your host, Dharma. This has been the Cryptoverse DAO. Thank you so much for being a part of it. Enjoy the rest of your day. Bye-bye.